Hey guys, welcome back to another video. In this video, I'm going to be talking about Chipotle, and as we can see over the last year, Chipotle is up almost 61%, while the rest of the market is up 20%. The S&P 500 did just pass the $500 mark, but they're still underperforming Chipotle, as we can see right here. So in this video, I'm going to talk a little bit about their business model, look into their financial statements, and then calculate the intrinsic value per share for their company so we can know if Chipotle is a good buy at the current share price. So first of all, their business model. For those of you who don't know, Chipotle is a restaurant chain serving Mexican fast food, and it was originally created in 1993 and currently operates 3,400 stores. Their distinguishing feature is the build your own approach in their stores, where customers are able to create their own orders with a wide range of proteins, salsas, toppings, and sauces. This allows each customer to customize their order to their own level of personalization, ensuring a satisfying customer experience for everyone, regardless of food preference. This, along with the fact that the restaurant crew members cook the food right in front of the customers in full view, ends up fostering a sense of trust and transparency in the food, which is one of the ways that Chipotle distinguishes themselves from other companies like McDonald's or Taco Bell. Chipotle works with key partners including food suppliers and distributors, delivery partners and digital platform providers, payment processors, and financial institutions and investors. Chipotle's primary focus is on development and innovation for their menu, cooking style, and food preparation, while also sourcing fresh and high-quality ingredients. Chipotle's value proposition can be described as offering health-conscious food, a family-friendly sit and dine environment, and also convenient, time-efficient service for busy professionals and students. The main revenue streams for Chipotle include food and beverage sales, catering services, and collaborations with other businesses. The main operating costs include costs to produce the food and build the stores, supply chain and distribution costs, marketing and advertising costs, administrative and fixed costs for running the stores, and investments in technology and digital selling channels. Lastly, to point out, Chipotle sells through their physical restaurants, their own website, and mobile apps like Uber Eats and DoorDash. By using mobile apps, customers pay through the app, and then Chipotle makes money from delivery fees or commissions from the negotiated partnerships with the mobile apps. And with their catering services, they're able to use that part of their business to serve large gatherings, events, and also to access the B2B market, business to business market, by selling to companies directly, which ends up generating additional revenue. So a lot of different avenues of revenue for Chipotle, and obviously it's been working pretty well because their business has been growing pretty rapidly over the last decade now. So now I want to get into the financial statements for the company. As we can see right here, this is the income statement for their third quarter. And we can see right here that revenue was about $2.5 billion, up 11% from $2.2 billion year over year. The increase in revenue here was driven by new store openings and also a 5% increase in sales in the same stores. And then we can also see right here net income of about $313 million, which is up 22% from $257 million year over year. So not bad revenue and earnings growth for the third quarter for Chipotle. Then right here, we can see their fourth quarter income statement right here. We can see revenue was about $2.5 billion, basically matching the third quarter's revenue of $2.5 billion. But for the fourth quarter, it was up 15% from $2.1 billion, whereas in the third quarter, it was up 11%. So pretty good revenue growth for the fourth quarter, a little bit better than the third quarter. And then we can also see for net income was also up a little bit more in the fourth quarter than in the third quarter. It was about $282 million, up 26% from $223 million compared to the third quarter, where they had $313 million, up 22% from $257 million. So it looks like in the third quarter, consistently year over year, they've performed better in terms of earnings than they have in the fourth quarter. But this year, their earnings increased more in the fourth quarter than it did in the third quarter. If I scroll down here, we can also see their income statement for the full year for 2023. we can see revenue came out to $9.9 billion, almost $10 billion for Chipotle, up 14% year over year from $8.6 billion. And we can also see that their net income came out to be about $1.23 billion, which is up 37% from $899 million. So that's pretty impressive earnings growth. Typically, you see that kind of earnings growth with like tech companies. So seeing that with a restaurant chain is obviously very impressive. Chipotle is still striving to increase the amount of stores that they own. They opened about 271 new restaurants in 2023, and they also repurchased about $589 million of common stock. So pretty good year for Chipotle. As we can see right here for their balance sheet, comparing 2023 to 2022, they had total assets of about $8 billion, up from about $6.9 billion. And then we can also see total liabilities came out to about $5 billion. Total equity was about $3 billion, with about $6 billion in retained earnings that they can use to reinvest back into the company or redistribute to shareholders. Then lastly, right here, we can see for their cash flow statement for 2023, they had operating cash flow of $1.7 billion. And then for their financing activities, we can also see acquisition of treasury stock of about $592 million. So they're returning value back to shareholders. They have really good operating cash flow. They have positive free cash flow, as we can see right here. If you subtract property, plant, and equipment, free cash flow came out to be about $1.2 billion. So pretty good year for Chipotle all around. Now we can calculate the intrinsic value per share for Chipotle using this DCF model. I'm using a growth rate of about 29% here, which I got from just using the free cash flows for their last 5 years from 2019 to 2023. It increased from about $390 million in 2019 to about $1.2, $1.3 million in 2023. So that's an increase of about 29% year over year compounded annually. So that's what I'm using for this DCF model. Then to calculate the discount rate, I'm using a weighted average cost of capital of 4.46%. I got that from this calculation right here. I basically took the interest rate for their debt, which is about 0%, because Chipotle doesn't really have that much long-term debt. And then we can also see that for cost of equity came out to be about 11%. So when you multiply that by the equity proportion and then multiply the debt proportion by cost of debt, you get the 4.46% here for the weighted average cost of Chipotle's capital. Then we can also see right here, if we subtract the debt from their cash, they have a net debt position of about $2.5 billion, and they have a very small number of shares outstanding, only about 27 million. So with these metrics in mind, their intrinsic value per share comes out to be about $2,800 per share, which means that at the current share price, they actually are trading below intrinsic value per share here. They're trading at $2,638 per share right now, even though they're up 60% over the last year from about $1,400 at the start of the year. They're still trading below intrinsic value per share. So based on these assumptions, it would look like Chipotle is actually a good buy at the current share price. Then right here, we can see a competitor or industry analysis comparing Chipotle to two of their other fast food competitors, McDonald's and Yum Brands. Yum Brands owns different restaurant chains like Taco Bell and KFC. So we can see right here, according to these financial metrics, it looks like Chipotle is actually lagging behind. They have the lowest profit margins here, and they're actually the only company that has return on equity because McDonald's and Yum Brands actually have negative equity on their balance sheet. They have more debt than assets, which can be useful in terms of helping them grow faster, but also dangerous because they don't have enough liquidity to cover their financial obligations, whereas Chipotle does, which means they have return on equity and a debt to equity ratio here of 1.5. They also have the highest PE ratio, which could mean that investors are pricing in that Chipotle is going to grow more than McDonald's and Yum Brands in the future, or it could mean that Chipotle is overpriced. But based on the fact that we calculated that their intrinsic value per share was actually higher than their current share price, it's difficult to say really if either the DCF model is wrong or the PE ratio is wrong in saying that Chipotle is overpriced. It really depends on the assumptions that you use for the DCF model. But we can also see here lastly that Chipotle is the only company out of the three that does not pay a dividend. It looks like Chipotle mainly prioritizes using that capital to reinvest back into the company and also buy back some shares, whereas McDonald's here is a pretty heavy hitter when it comes to paying out dividends to shareholders. So if you were going to base your analysis off of this competitor analysis, it looks like you'd probably want to give it to McDonald's because they have a pretty low PE ratio. They pay the highest dividend, and they also have the best profit margins. Then lastly, I wanted to compare Chipotle to the other companies we've looked at on this channel. Surprisingly, Chipotle was actually trading below intrinsic value per share, so they do make it into the 10th spot here, trading at about 88% of their estimated intrinsic value. So that's obviously pretty good for Chipotle. And then right here, we can see for growth rate, Chipotle also had a pretty impressive growth rate over the last 5 years of about 29%, putting them in the 5th place here on the growth rate table. They don't pay a dividend, so they don't make it onto this table. 3M has the highest at 4.9%. We can see that for profitability ratios, we saw that Chipotle had pretty low profit margins. They had about 20% gross profit, 10% net profit, not good enough to get them onto either table. Adobe had the highest at 86%. Oxy had the highest at 36% net profit. And then for Q3 year-over-year revenue and earnings growth, Chipotle comes in 6th place on the revenue growth at 11% year-over-year, and 8th place on the earnings table at 22%. Pretty amazing that at 22% earnings growth, Chipotle comes in 8th place. Just goes to show that for the third quarter, there were a lot of companies that reported really impressive earnings growth. We can see right here some companies going into the hundreds, and not just tech companies, even General Electric, which is mainly an aerospace company, coming in at 193%. But 22% is definitely not something to complain about. I also marked them down for the Q4 table here. They come in 2nd place and 3rd place here. Looks like nobody's really going to be able to beat Amazon's 3,400%. But all in all, still very impressive earnings growth. If Chipotle is able to maintain their spot on the 3rd quarter table after we're done looking at companies for the 3rd quarter and on the 4th quarter table, then they will have appeared in the year-over-year revenue growth table for the 2nd quarter, 3rd quarter, and 4th quarter, which could be an indication that Chipotle is one of the main revenue growth companies in the market compared to other companies we've been looking at. So it could be a good company to keep our eye on if that ends up being the case. Lastly, for stock performance over the last 5 years, Chipotle has actually had a pretty impressive return over the last 5 years, about 400% almost now. So definitely good enough to get onto this table. They come in 6th place, right behind Eli Lilly, AMD, Kurasushi, Nvidia, and then also Tesla at the highest with 850%. So let me know in the comment section down below what you guys think of Chipotle. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.